Hi everyone, hope you're all doing well. Today I'm going to do my US stock portfolio for December 2024. So this is a series that I do on the YouTube channel every 3 months to show you guys how the portfolio is doing. I'll do the UK one next week for you guys. But in this portfolio, you get to see all my positions, what I'm up, what I'm down, the allocation of every position. And it's a series that I've done on the YouTube channel, I think for nearly 8 years now. So it just keeps up that transparency, and anything that I own is in here. And if it's not in there, obviously I've sold the portfolio. I am very different from other YouTubers that maybe just sell something quietly in the background and hope you don't notice it. Can't do that when I'm doing the updates for you guys. And I don't have hidden accounts that I show you guys and go, oh, look at this stock that I'm up. Everything that I have are in these portfolios, guys. So I hope you enjoyed the video, guys. Let's get started. So I'm going to go through my 2 portfolios here and show you guys what is up, what is down, and my allocation to everything. A few people ask me why I have 2 portfolios, and the reason why is because I diversify my investments in case anything goes wrong with one broker. I don't lose all my money. A lot of my wealth is tied up in the stock market, and it will take me many years to recover it if I was to lose it. So I just diversify for that reason. And the other reason why is Trading 212 really didn't focus on stocks until about 2019, so I was using another broker before that time, and I keep using them now, just like I said, to diverse the risk. The other thing that a few people say is, why don't I show the actual money amount? Like I just said, a lot of my wealth is tied up in here, and unfortunately I did actually used to show how much I had in these accounts. So any of you guys that used to watch the videos in like 2017, 2018, you have a good idea probably how much are in these accounts. But from now on, I don't actually share it, just because I want to keep things a little bit private. I've had people try getting my accounts before, and I don't want to lose my money that I've worked so hard for. And as well as that, I have now a lot of friends and family that watch a lot of my videos, and I just want to keep things a little bit more private as well. So I hope that kind of makes sense. If it doesn't, tough luck. So like I said, I update these on YouTube every 3 months. So the next time I'll do this will be March 2025, which is absolutely crazy to say. If you do want to see one update every month, then you can join the Patreon. I do it every month. I do this video series every month on the Patreon, and on there you get 100 exclusive videos in 2025. £44 for the full year. If you want to join, send me an email, jkinvesting@gmail.com, and I'll get you on there. We're very close to about 100 people joining the Black Friday sale at the moment, which has been absolutely mega. So I'm trying to keep up to all your emails, guys, so I will try to get back to you. Anyway, video today, US portfolio. Overall, yeah, really good. If somebody said to me back in 2022 when we had the horrible stock market, the worst stock market from 2000 since 2008, if somebody said to me, this is what your portfolio would look like in 2 years' time, I'd be like, yeah, give me it, because it's going really well. The stock portfolio has done very well. It's allowed me to outperform the market in 2023. At the moment in 2024, I'm outperforming the S&P by about 10%. I'm up about 37% year to date. I'll do a full video at the end of the year when I do know my full return, but it looks like another 2 years of beating the market. There's only 1 year I haven't beaten the market since 2017, which was 2022. So yeah, it's really good. And I think as you start looking through the portfolio, you'll be able to see like there's a lot of stocks with over 100% return in the portfolio, which is obviously really good to see. And anyway, I'm going to spend a minute or two on every stock if I can. So Alibaba down 30%. I have had this stock in this portfolio since about 2018. Originally, I was up 100% on the position. I decided to then sell half my position out back in 2020 when the stock rallied a fair amount. Since then, the stock's fallen down a lot, more than what I thought it would. It's now down at 9 times earnings, and I actually think for the numbers that Alibaba are doing at 9 times earnings, pretty good value with this one in my opinion. We've got some Celsius. Celsius is a stock I've owned since 2022. It was a stock that I made over 100% return on. Sold my position out, and then the stock started falling. It's fallen a lot more than what I thought it would, and that's why I'm down a little bit on it. But I started buying back in, and yeah, I like Celsius. At the moment, the financials are not the best, but that's because Pepsi are ordering a lot less off them, and they are the distribution partner. Once they've gone through and cut the inventory, they'll go back to ordering from Celsius. The thing that I look at Celsius is the scanning data. So when you are checking out the tills, at the moment, the sales at the tills are still growing and at very good rates. So if that translates to the revenue, which we'll do, because when Pepsi get through their overstacking of inventory, Yeah, the company should go back to very good amounts of growth. So I like Celsius here. Meta, we're up 254% on in this position. Yeah, really, really good. You know, not only just being up 100%, but 254%. It's been a really good performer for us. We've got some Huya. Huya's actually done really well. Even though it's down 78%, the numbers on the recent quarter, that's not Huya, the numbers on the recent quarter were actually pretty decent. The advertising business is coming back really strong. I've actually had 2 really chunky dividends off these guys as well, which, even though I'm down 78%, I think the dividend yields puts it down to like 40% that I'm down on if you include the dividends. And yeah, if anything, I'm actually closer to being a buyer than a seller. So yeah, they got a little bit unlucky with some Chinese regulation, and hopefully they can get past it and they do really well. Microsoft, my largest position in 2017, 2018 and 2019. It was my largest position for many years in the portfolio. Not being a buyer since 2020 though. The shares that I do hold from being my large position originally are now up 300%. So I guess that's the perks. That's the position that I've held the longest in the portfolio. Some of those shares I have a cost basis average of $80 on, which is actually crazy to say now. So yeah, if we actually, I've not actually got a stock chart of Microsoft up, but yeah, if you look at when the stock was $80, it kind of shows you how long ago I was buying that one. PayPal up 54% in this portfolio. Yeah, really good run from PayPal. I'll be honest with you, I've not bought for a while now. I think the valuation is pretty fair. I thought the last earnings weren't great, to be honest with you. So if anything, I'll let you in a bit of a hint. I've actually been reducing my PayPal position. Not in this portfolio, I've been doing it actually in the other portfolio, which I'll show you in a second. But yeah, I've actually been releasing some profit off that one now. Google, we're up 17% on. This is the big buy that I did quite recently. It's not my main holding. I bought this in this account just to diversify a little bit. Visa, we're up 100% on. That's been a very good performance this year. I probably should have bought Visa a while ago when it was having a dip through the summertime. Never did, my mistake. But yeah, I've had that one in the portfolio for around about 5 years now. It's been in there for a good while. Walt Disney, we're up 7% now. They had really good earnings. I think Disney's earnings in the last few quarters have been very, very good. So really happy with what's going on with Disney. And then I've got some of the only ETF that I own, which is the S&P 600 small caps. I think I made a video not too long ago saying like, this is the only index I'm going to buy. I really like the value of the small caps at the moment. And since I bought the S&P small caps, yeah, it's done really well. So I do have a good chunk in that ETF, and that's the only ETF that I do own. In the other portfolio, we've got some more Alibaba and then my main kind of Google position. The King, we're up 52% on the King. You might be able to tell, as you can see here, it has now reduced to my second largest position. I have been selling some shares off on the King. Obviously not loads, but a little bit. The reason why is that I just don't think they've had as good 2024 as 2023. I think they've not been as good as FanDuel, not made as many good partnerships. And as well as that, I've been diversifying out of the gambling stocks for like gambling.com as well, which is the new position. So yeah, but I'm still up 52%, which is obviously, you know, really good. D-Local, we're down 23% on, a bit of a newer position. It had a bit of a tough time to start with, but the recent earnings have been a step in the right direction, and the new CEO that came across from Mercado Libre to these guys is a good reason why I'm buying them, and hopefully that carries on doing quite well. Looking at the next position, which we've got EHang, that's a bit of a high risk play into the drone space. Very small position. It could either go bust and lose 100%, or it could probably be a 5 to 10xer. I feel like it probably should be more towards a 5 to 10xer now, because the numbers that they've been doing recently have been very, very impressive. And while the stock is not being, or the financials are not being reflected in the stock price, I actually get a little bit closer to buying a little bit more of this one anyway. And then we've got some gambling.com, which is obviously the newer stock into the portfolio, which I covered on Monday. Still a very, very small position, as you can see here. Got some Meta in this one, which we're up 159% on. Some Topgolf Callaway, which we're down 62% on. This one's been a little bit frustrating, Topgolf Callaway, because we had the stock do really good financials and it just wasn't reflected in the share price. And now the stock is actually having some not great financials, and the stock is now down 49%, and it's a bit like... And the stock is valued at 1.5 billion market cap right now. Even though they paid $2 billion for Topgolf, I think $500 million for Jack Wolfskin, and the Callaway brand before the Topgolf merger was worth like $2-3 billion. So this company really should be like $4-5 billion on that point of view. They are trying to get the best value out for shareholders, and they're trying to do like break up the company into separate parts, and maybe that releases more value. But yeah, I do look at Topgolf, and it's a bit frustrating because this stock should have done a lot better in 2022 and 2023. And it never got the reflection on the share price, and now it's having a tough time, and it's like, well, You know, even though it's not great financials, should it be really this low? So I would like to buy it, but I want to see stronger financials from them to buy it. The big thing that's kind of weighing down the numbers at the moment is the Jack Wolfskin, and that's the actual brand that I don't like with this business. So we'll keep an eye on that one anyway. Hims and Hers, my large position in the portfolio, up 352%, really good. So this has been the main driver of my reason for beating the S&P 500 in last year. It's the reason why at summertime I was actually a little bit behind the S&P 500, but because of the rally in Hims and Hers and it being my largest position is the reason why I'm actually beating the S&P 500 this year. As you can see here, when your largest position is up 218% in the stock market, you're going to be doing really well, and that's the case with Hims and Hers. We've covered that quite a bit on the YouTube channel. In mode, we're down 12% on. I'd really like to buy a little bit more in mode, but the problem is that they just are not delivering on the financials just yet. I am hoping that when we get the lower interest rate environment, they do start rallying up a little bit, but when you look at the numbers they're doing and the amount of profit they throw off, this company only needs to go to like 3-4% revenue growth a year and this stock will fly. So hopefully when the interest rate cuts start coming and people can buy their equipment for a lot cheaper, that does start happening and we do see it bounce. But you know, I remember the days where we were up like I remember selling some of the stock out for like 400% in 2021, and yeah, I'm sure it's going to bounce back. I think it's going to bounce back anyway. Lululemon, we're up 33% on. I'm a bit unsure where I go with that one now. I didn't really get the position size that I wanted to buy, but I also think it still has a bit of upside here as well. So not sure on that one. Planet 13 down 91%. That's a high spec play, like EHang into like the MJ space. Numbers haven't been as good as EHang's numbers, but saying that, the numbers have been a lot better in the recent quarters, so hopefully they're turning the corner right now. Mercado Libre, we're up 78% on. A very large position for mine. I probably don't talk about it enough on the YouTube channel, but yeah, I really like Mercado Libre. The numbers they're doing are absolutely fantastic. Had a very stupid dip off earnings not too long ago, as you can see here, and I did add in my position, and that stock did have that dip. Funny enough, it has recovered all of the dip right now, so yeah, really happy I was able to make that one a little bit bigger than where it was at. So far, we're up 121% on. Another reason why I've started to outperform the S&P 500 towards the back end of the year. Obviously, this one has gone on a very good rally towards the back end of the year, and I believe now it's only 2 billion market cap off potentially being in the S&P 500, and we've seen before when stocks get added to the S&P 500, some of the rallies that go on are absolutely mega. So yeah, really happy with SoFi's performance. Believe it's my 6th, 7th largest position in the portfolio. PayPal, up 21% on. Like I said, I have been releasing some of my position in PayPal now and take some profit off the table. I don't think PayPal's numbers recently have been as good as the likes of Google and Meta's and Hims and Hers and Mercado Libres. So yeah, I have been selling a little bit of my PayPal off. SoFi, a bit of a sneaky winner in the background as well. That one's now up 61%. That's been having a really good rally towards the back end of the year, and that's up 51% year to date. Same again, not really another one that I talk about that much on the YouTube channel, but yeah, it's been a very good performer for me, and once again a larger position in the portfolio, probably like the 7th or 8th largest. We've got some Evolution, which remains to be one of the only stocks in the US market right now that I'm seeing any kind of value in, so I am currently adding some Evolution into the portfolio more and more. Block's been on a decent rally, but still about down slightly on it. I'm kind of thinking what I do with Block, because obviously I've got PayPal, SoFi and Block in the portfolio, and I feel like maybe free fintechs is maybe a bit too much, so I don't know if I reduce one of them. Originally the plan was for it to be Block, but looking at PayPal's recent numbers, I don't know if it's PayPal, we'll see. And then we've got some Ulta, which is down 2% in the portfolio. I won't mind buying Ulta, but I want it cheaper, so I've been holding off buying that one at the moment. And then we've got some Disney that's up 15% in this portfolio as well. So yeah, overall, I'm really happy with how the portfolio is doing. Really happy with the amount of positions I have. I think this is just about perfect, which is great. Obviously some really good performers here. I mean, we've got a lot of stocks. So we've got 6 stocks with over 100% returns, and obviously some very close to breaking the 100% returns at the moment here. Really happy with how the portfolio is doing, and really good returns from the portfolio. Selling wise, there's probably a couple of stocks that I just keep taking the profit from. Buying wise, the only thing that I'm really seeing good value in here at the moment is Evolution. So I probably won't be that active buying during this period of time, but you never know, because I said that last month when I was doing the same video on the Patreon, and then out of nowhere we had Hims drop to $19, and I was like, yep, I'll buy that dip. And then Mercado Libre. I mean, Mercado Libre, when they reported their earnings as well, out of nowhere, the stock fell. What was the drop on that? It says 16%, but I feel like Mercado Libre was down like 20-something% when it did dip off earnings. And, you know, if I do get those dips, then I'll actively go out and buy it, and I just don't see them happening, and they do, and then I'll buy them. So you never know. There might be a dip out somewhere where I do go buy it, but yeah, I think I'll be a little bit quieter on the buying front and probably more active on the selling front, but you just never know in the market. But yeah, overall, I'm really happy with how the portfolio is done. It's really doing really well, and hopefully the gains just continue to keep running up at the moment. Anyway, so that's the portfolio, guys. Hope you enjoyed it. I'll see you in a bit.